Is that true?
That is right.
There's something to do with a Barbie doll.
She used to stick the old school Barbie dolls in the cake.
Oh my God, you're giving me goosebumps right now.
The radio medium Laura Lee Show. Tune into your spirit every Tuesday at 4 p.m.
My name is Dale Pazinski. I volunteer with United Way to help the homeless in my community learn computer skills and build a basic resume. I don't just wear the shirt, I live it.
Give, advocate, volunteer, Live United. Go to liveunited.org. Brought to you by United Way and the Ad Council.
You're tuned in to Money Matters Boston, 1120 AM WBNW. This is WBNW 1120 AM, the Money Matters Radio Network. This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM. Concord, Boston, the Money Matters Radio Network.
Congratulations to the students and staff of Emergence Academy in Springfield, Massachusetts for their winning submission to the state's Power of Presence initiative. The school's amazing video will help spread the word about the power of students being in school every day. To see the video and learn more, visit us at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a new guide available this month. It is titled Trusts in Your Financial Plan. Mike, when you look at the big reasons that someone might want to undertake trust planning and how that dovetails with financial planning, what are the big items that come up for a lot of people?
Yeah, for most common reasons, there's four that I think about. One, in certain states and across the country, there's an estate tax, and so there's trusts that can help you mitigate the cost of that estate tax for future generations. There's trusts that can allow you to do sorts of bloodline planning. Maybe you have minor children and you're worried about passing away young. You can have trusts that are set up to deal with that situation. You have trusts that can avoid probate. And then the fourth one is sometimes a trust that might help deal with creditor protection. Sometimes a nursing home would be one of those creditors.
When we talk about financial planning, generally we're talking about things such as budgeting or investment allocations and things like that, and making that work to get you the money when you want it. How do you view trusts as fitting into that as well?
Well, it's one of those boxes that you need to check, and it goes along with other estate planning documents like a will, like a healthcare proxy. But important for most people, especially those in New England, to at least have the conversation around trusts and whether or not it fits into their strategy.
The guide, again, is titled Trusts in Your Financial Plan, and it is available for you to request at no cost. All you have to do is call 800-393-4001. The title, again, is Trusts in Your Financial Plan, and the way to request the guide is by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
The Copley Square Farmers Market has returned to its original home in the beautifully renovated plaza. Open Tuesdays and Fridays. Shop for locally grown fresh fruits and vegetables, sustainably raised meats and seafood, regional cheeses and handmade items, while connecting with neighbors in one of Boston's most cherished public spaces. Visit the Copley Square Farmers Market and support farmers and local makers. Sponsored by Mass Farmers Markets, a nonprofit working to strengthen farmers across Massachusetts. Find markets near you at massfarmersmarkets.org.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We pride ourselves on being able to support veterans in their time of greatest need, ensuring they receive the protections they deserve. For over 100 years, the DAV of Massachusetts has helped thousands of veterans with housing, transportation, and medical assistance, and you can help too. Please visit dav5k.boston and make a donation today. That's dav5k.boston.
The United States Virgin Islands is consistently voted one of the top Caribbean destinations. And recently, two of their beaches, Trunk Bay in St. John and Maggins Bay in St. Thomas, were voted a top 10 best beach in the Caribbean at the 2025 Traveler's Choice Best of the Best Awards. From the pristine beaches to its world-class dining, rich history, incredible golf, and perfect weather, the USVI has everything you need to make memories that will last a lifetime. From the moment you arrive, you will fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com today. That's visitusvi.com. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Marc Fandetti.
Good morning. Happy Friday. Happy Friday before Memorial Day. Hope everybody made it out of the storms last night with electricity and no downed trees in their neighborhood. I woke up this morning figuring, hey, it's the Friday before Memorial Day weekend. It's a long weekend. Traders are taking the day off. Writers are taking the day off. We're going to be talking about the penny. We're going to be talking about the Supreme Court case that, preserves some independence at the Fed, seemingly. But there's not going to be a lot of market news.
No, veggie burgers or real burgers or buns.
How much
or
traffic is going to be between New York and Boston? How long is it going to take me to get up to the Lakes region of New Hampshire this weekend? But nay, the Trump administration has come out and given us all the story that we need for this morning with new announcements on tariffs after 6 or 7 weeks of de-escalation on the tariff front. Let's see. I think it's 6. April 11th was the first date that the Trump administration, or no. I think it was
Recently.
the 9th. I think it was the 9th that they walked back the reciprocal tariffs, rather. And since then, it's all been de-escalatory in one direction. But today, heating things back up. First, we had an announcement come out when it came to Apple products manufactured outside the United States. The president pushing a 25% tariff, seemingly just on Apple, but presumably on all electronic devices made outside the United States. I would think this applies to semiconductors and other technological products that aren't already subject to Chinese tariffs, for example. Unclear to me whether or not that is on top of 10% universal tariffs that are baseline on every country, but I would assume so. So in any case, we will see where that goes. But they had specifically carved out semiconductors and electronics when it came to Apple, when it came to the first China tariffs that were announced at 100, that ultimately came to 145%, now are sitting at 30%. Will this be a separate 25% rate, an addition? We will find out. On top of that, we've learned this morning that the Trump administration is looking to impose tariffs of 50% on goods coming from the European Union. This is another set of big news as the seeming negotiations have been going on between members of the EU and the Trump administration and members of just about every government across the world and the Trump administration, and an indication that those negotiations perhaps are not going terribly well in the president's eyes. Where do you want to start, Mark?
Yeah, where
Apple
do
or
you start? All I can say is if a Democrat president had in the past 2 weeks told Walmart what they can charge, not about a week before that told Amazon you better not you better not decompose prices on your website, and this morning told Apple where they can produce and where they can't. If this were a Democrat president, free market Republicans would be rightly screaming bloody murder. The real story here to me is the deviation from the institutions and the norms that have made this country what it is, at least economically. This pattern of behavior, and maybe this is Trump just trying to dominate the news, trying to shift attention away from an unpopular tax plan, trying to shift attention away from the dinner he had with crypto donors to his personal wallet, not to any party or certainly not to the government last night. So you never know with him. He's very good at changing the story. This could just be changing the story, but we have to interpret it as new policy. The departure from traditional free market principles here is sad, to me personally appalling. And where is the free market wing of the Republican Party on this, Mike? That's the first thing that comes to mind to me. And by that I mean Rand Paul and Massey, both from Kentucky. There've got to be others. If not, we're doomed.
Well, this has been a pretty consistent move, but where I want to focus this for a moment here is on a question that I received from Matt Gagnani. He's the host of the Portland Maine show that we broadcast our show on up in Portland, and he asked an interesting question, which is this credible? Does anyone believe it?
Of course not.
And I think
that question?
Well, I mean, to some degree, somebody trusts it because the S&P 500's off 0.9%. European markets are off closer to, depends on which one you're looking at, but the DAX is off 1.7%. The European Auto Index is down 3.6%, and Apple stock this morning is down about 2.25%, 2.33%.
But
and
that's not a proportional reaction.
It's not. And that's what I come back to. You're right. Is yes, these stocks are down. Some investors are buying it. Some investors are on vacation and are not trading today. And so I don't want to read too much into the Friday before Memorial Day in terms of price movements. But there's some credibility lacking on this. If we actually believed that tariffs were going to be hitting every Apple product other than the one thing they make in Texas, I think, at a rate of 25%, would Apple stock be down 2.4%? Of course not. It would be down massively more because this is a huge change to their business that will add billions of dollars of cost to iPhones. There's been estimates out there that it would cost $3,500 to manufacture the iPhone here in the United States. This would add... What's the newest iPhone go for these days, Tucker?
The base one, iPhone 16, I think is $799.
And I think they've got something like a 40% profit margin on there. So, tack on, let's see, a few $100s to just the import cost of these things. It's clear to me that investors aren't buying it.
You've already done more analysis than the Trump administration has done on this in the past 30 seconds in your head, off the top of your head. The point of this is not to be serious. This is not meant to be taken as policy. It's either meant as a diversion from something else or just meant to impose his will on the private sector, to continue to soften them up, to get them to accept whatever it is he wants them to accept. There's no analytical solution to this.
Maybe.
That's the only conclusion I can come to after the past couple of weeks of egregious anti-free market behavior from a supposedly Republican administration. I'm sorry, but that's the bottom line.
What I worry about on this, frankly, is the credibility issue. It was being called into question back in February when the president was threatening tariffs. Nobody believed him. He did impose those tariffs. Markets sank 20%. He waived the tariffs. Markets made up all of their lost area here. And I think that genuinely nobody believes that this is real. And so if I'm negotiators on the European Union side, if I'm Tim Cook, I'm not sure I'm panicked one bit right now. I'm sure they are.
He might follow through if they don't buckle.
So
if they don't bend to his will.
Right. And I just don't know where that goes. In terms of imports from the European Union in 2024, they totaled some $2.8 trillion. The largest single product category included mineral fuels, oils, distillation products. That was about these are coming from the United States. disregard. I believe the largest category of imports dollar-wise from the European Union into the United States is largely transportation equipment between cars and Airbus planes. By the way, let's just think about for a moment the reality of 50% tariffs on European manufactured planes coming into the United States is almost definitely not going to happen and is not terribly credible. But everything from wine to agricultural products, olive oil, there's lots of stuff that is made in the European Union that comes into the United States, and plenty of stuff that is made in the United States that goes over to the EU. I suspect this is a negotiating tactic. I suspect it's to soften them out, but then come up with a deal that gets created. But again, where I worry about this is the credibility side of things. I think this is putting the president in a more difficult negotiating position for the future.
I think to chase the specifics of this is probably I'm not suggesting we shouldn't be doing it, but I think it's actually the wrong approach. The economic implications of this stem from the erosion of rule of law and consistency. If stocks sell off, and they're only doing so very modestly, to your point, people don't think that we're going to follow through on the latest threats because we've buckled each time, because we've reneged each time. The threat here is to long-term growth. There are arguably a few things that have made the U.S. the country that it is today economically. The rule of law, our institutions, and the fact that no one is above the law. That's the biggie, I think. In fact, every economist would agree that institutions are paramount. The second is our science and innovation system. That's being attacked from a different angle. This could in part be a effort to distract us from that. I don't know. And then finally, Mike, openness to foreign talent, which comes through immigration. All three are under assault right now. Those three things were traditionally free market Republican, and I mean the Republican Party, principles. So I don't understand what's happening. I don't understand why we're jeopardizing the miraculous economic growth engine that we created.
Let's take a quick break. When we come back, I want to move along from the tariffs because, quite honestly, there's too much that we don't know about it at this stage. 25% announced on Apple, 50% announced on European Union goods. If we get new updates or press conferences on those numbers or those details as the show goes along, we will keep you updated. Markets selling off partly in response to all of this. I want to move along to what we've been seeing for the last 6 weeks in the bond market, and specifically what we're seeing in the bond market this morning. That's next here on the Financial Exchange.
Get up-to-the-minute market updates with Wall Street Watch, weekdays at 10:30, only here on the Financial Exchange Radio Network. The United States Virgin Islands is consistently voted one of the top Caribbean destinations, and recently, 2 of their beaches, Trunk Bay in St. John and Maggins Bay in St. Thomas, were voted a top 10 best beach in the Caribbean at the 2025 Traveler's Choice Best of the Best Awards. From the pristine beaches to its world-class dining, rich history, incredible golf, and perfect weather, the USVI has everything you need to make memories that will last a lifetime. From the moment you arrive, you will fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com today. That's visitusvi.com. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We focus on the people returning from service, not their specific illness or injury. Our number one goal is to make sure our veterans have the necessary services they need, be it physical, emotional, or financial, so that their transition can be seamless. You can help our great American heroes as well by making a donation today by visiting dav5k.boston. That's DAV5K.Boston.
Trust can play a key role in your financial strategy, and understanding the different kinds and their purpose may help you make the right decisions for your overall plan. Hi, this is Chuck Zada from the Armstrong Advisory Group. Trusts are utilized for a variety of reasons, but the most basic use is to make settling an estate easier. Trusts have the ability to bypass probate, which can save you significant time and money while allowing your assets to be distributed directly to your beneficiaries. Our new guide this month is called Trusts in Your Financial Plan, and you can get it by calling 800-393-4001. Learn about trusts and their possible benefits to your financial strategy by requesting your free guide today. That number again is 800-393-4001, or request it online at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. The U.S. Virgin Islands are St. Croix, St. Thomas, and St. John, and are consistently voted one of the top Caribbean vacation destinations. Enjoy world-class cuisine, pristine beaches, rich history, and a vibrant nightlife. Book your trip now to visit America's Caribbean paradise, the United States Virgin Islands. For reservations and more information, go to visitusvi.com. That's visitusvi.com.
Mark, I want to revisit our stories about the bond market because kind of just like every time long-term government bonds start running up in terms of yield, all the stories come out about bond vigilantes. And hey, the vigilantes are at it again. They're starting to care about deficits, and they're going to start dumping U.S. bonds, and it's the end of the world as we know it. These stories were printed back in 2023 when yields spiked. I think they were printed back in 2024 when yields spiked, and yields spiked again over the last 6 weeks or so, and they've been getting run again. I think it's fair to say that we covered this in 2023, and I remember the conversation being, could it be bond vigilantes really worried about deficits? Maybe. And government spending? Yeah, could be. But then yields fell, and you just were left sitting there saying, well, I guess not, because nothing has changed in terms of the Biden's plan for massive government spending without corresponding spending cuts or tax increases, and nothing has changed fundamentally about the state of, other global economic factors. And so, no, it turns out it was not bond vigilantes taking a stand and saying, no more will we support the United States government's debt. I hesitate to say that we should interpret it any differently this time, but those stories are coming up again. And here is the narrative as I see it around bond yields and why it matters this time. And I have no idea whether or not it turns out to be true. But for the last 60 years, but I guess let's concentrate a little bit more on the last 25. Since the Clinton administration, presidents in the United States have run huge deficits. They have not in any meaningful way seriously considered paying for those deficits. They were substantial during the last few years of the Biden administration, huge during the last few years of the Trump administration, and by all predictions will be massive this year as well. The only reason that the United States has been able to do so without seeing what the type of thing that you see in Argentina and Greece and other nations where they have these types of fiscal situations and then interest rates run through the roof, has been based on a few factors, but the special status of the United States. And one of those special statuses is that we send a boatload of dollars overseas when we import all sorts of stuff. We don't save a whole lot of money in this country. Compared to other countries, the savings rates are really small. And so, when I go and buy a whole bunch of what have I bought from China? A whole bunch of stone for my deck from China, and I send those dollars over to China, they have historically turned around and went and bought treasuries. As such, according to Congress in December of 2023, the mainland China was the second largest foreign holder of U.S. federal debt. It represented about 10% of the foreign holders of U.S. federal debt. Japan makes up the number one spot at 14%, UK at 9%, Luxembourg at 5%. Kind of weird that Luxembourg's up there at 5%. Canada buys about 4%. Ireland buys 4%.
I think that's
Belgium.
Speculated that that's other countries that
hiding the money.
Yeah,
that makes sense. So here is the theory of how the bond vigilantes are coming out this time. You continue to run massive deficits. You are proposing a massive tax cut through the Trump administration without any meaningful cuts to spending. And at the same time, you are threatening our economies via trade and wanting to disrupt that global order of where dollars go. So why should we continue to support your fiscal situation, which has just gotten worse and worse and worse?
Mm-hmm.
Which, again, I'm not putting this on the feet of the Trump administration. They are a contributing factor, but this has been every single president since Clinton. So, we've got a long history in this country of having no fiscal order when it comes to our deficits. I guess the question is, why should I buy it this time as opposed to every other time that we've talked about this potential theme?
Well, because we're changing the set of norms by which this country has behaved. It's the point I made in my little rant in the last segment when I expressed my frustration at the lack of adherence to basic free market principles when Trump bullies companies like Apple and Amazon, and the disregard of the need for those foreign savings to finance our deficit and make investments here because we don't save enough. Interest rates are set in a global market based on the supply and demand for so-called loanable funds. Companies need money. Governments need money. When the deficit goes up, we need somebody to buy those treasury bills, which are just tradable loans. If you're cutting off trade, there'll be fewer dollars abroad that get recycled into those loans, as you pointed out. Or you may just upset countries and investors globally with trade wars and your antics generally, causing them to shun treasuries or believe that they're no longer the world's safe haven assets. So we have been privileged.
Obviously there's implications for lawmakers, for financial institutions. Why should Main Street care?
It will probably mean higher interest rates, higher
were this all to
borrowing
come to
costs.
pass in the way we're discussing.
Yeah,
it would mean,
in fact, it almost has to.
Yeah.
We'll, if we don't start saving more, which we won't, and that means both the government and us as people, interest rates will go up if there's less foreign capital coming
mortgage
in from
rates,
abroad.
car loan rates, credit card rates.
Right on down the line. Not all equally, obviously, but yeah.
All of those things go higher. And hypothetically, the only way to save that is by the Federal Reserve buying a whole bunch of that stuff, i.e. printing a whole bunch of money. So hypothetically, dollar goes down and prices go
rates
higher.
Still go up.
Too.
You have to keep in mind rates are composed of two components. There's a real component driven by real forces. We can get into this on the other side if you think it's worthwhile. Otherwise, we'll just let it go. And then there's the expected inflation component. So when rates go up, you're always asking, is it expected inflation that's rising, or is it concern about the U.S.'s ability to maintain its full faith and credit status? You never really know. Bond vigilantes are one way of putting what's been happening in the I don't really know category.
Now, the counterpoint, today, on the heels of these tariff announcements, yields moving down. We'll talk about that and more next with Wall Street Watch.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
There are critical mistakes you can make during the estate planning process that may have a damaging effect on your financial strategy. Cushing & Dolan's new guide is called Detour Ahead, Estate Planning Blunders to Avoid. Get yours today and make the right decisions to protect your assets. Call 866-848-5699. That's 866-848-5699 or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Hi, this is Mike Armstrong from the Armstrong Advisory Group. Estate and financial planning go hand in hand, and one of the most common ways to keep that bond secure is with a trust. Our new guide, called Trusts in Your Financial Plan, is available right now. In it, we'll discuss the various types of trusts that exist and how they might benefit your planning process. Trusts provide a number of different protections for your assets, including privacy, control, and tax efficiency. If you're retired or nearing retirement and have concerns about your financial strategy and whether or not a trust may help, call us today at 800-393-4001 and ask for your free guide called Trusts in Your Financial Plan. Learn about how a trust could make a difference for you and your family by calling 800-393-4001. That number again is 800-393-4001, or you can request the guide from ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke with your Financial Exchange Quick Tip of the Day. And today, we're talking about the top estate planning mistakes to avoid. Todd, a lot of people create their estate plan, but there are some that don't actually transfer assets into it. Can you explain why this is such a big mistake?
Sure. I mean, I'm going to try to explain it both from a revocable and an irrevocable planning standpoint. With the revocable, if you don't put assets in there, you end up leaving them owned perhaps jointly if you're married, and designated beneficiaries and the like. But if everything goes to the spouse, when one dies, then you've completely avoided your estate plan. In other words, you've set your trust up, but you went around it by leaving everything to the spouse instead of going through it by funding the trust and cramming down the assets to shelter some from estate taxes on the first death, so there's less taxed on the second death. And ultimately, on the second death, if you don't plan, there could be a probate problem because everything would go to probate if it's in their own name. The other big reason is with an irrevocable trust, of course, not funding it also can result in estate tax problems by the same way it did with the revocable trust. But in addition to not funding them with the irrevocable, you don't even begin the 5-year waiting period to get the assets protected from the nursing home. So there's a much bigger problem not funding an irrevocable trust versus not funding a revocable trust. So make sure you fund your trust if you do your planning.
Well, luckily, Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide that details the estate planning blunders to avoid. You can request this brand new guide guide by simply calling 866-848-5699, 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Markets are selling off in reaction to President Trump's latest tariffs threats this morning on Apple and the EU. In a social media post, Trump said that Apple will have to pay a tariff of 25% or more for iPhones made outside of the U.S. Trump also said he is recommending a 50% tariff on the EU that would begin on June 1st as trade negotiations have stalled. Right now, the Dow is down by 0.2% or 281 points. S&P 500 is down about 0.75% or 45 points, and the Nasdaq down by 1% or 187 points. Russell 2000 is also down by 0.75%. 10-year Treasury yield down by 3 basis points, now at 4.52%, and crude oil up 1% higher so far today, trading just below $62 a barrel. As I mentioned, Apple, that stock is down 2% in reaction to Trump's tariff post this morning. Meanwhile, Deckers Outdoors down by 21% after the maker of Ugg boots missed quarterly outlook expectations and declined to offer full-year guidance for fiscal 2026, citing macroeconomic uncertainty related to evolving global trade policies. Comparably, discount department store chain Ross Stores withdrew its annual outlook as tariffs are expected to drag on earnings as more than half of its products originate from China. That stock, Ross Stores, is down by 14%. Elsewhere, tax and business software company Intuit posted better than expected adjusted earnings and revenue for the previous quarter and issued an optimistic outlook, sending shares up by 8%. Several nuclear stocks are seeing gains after Reuters reported that Trump will sign orders to boost nuclear power as soon as today. Oklo up by 25%, NewScale up by 18%, and Constellation Energy is up by 1%. And Wedbush analyst Dan Ives lifted his price target of Tesla, saying he believes the golden age of autonomous is now on the doorstep for Tesla ahead of the EV maker's expected robo-taxi launch in Austin next month. However, Tesla is retreating by 1.5% today. I'm Tucker Silva, and that's Wall Street Watch.
Tesla had better hope so, because did you guys see that story of where those used Cybertrucks are going for these days?
Yeah.
So a new Cybertruck was going for about $100,000, and they took a look at a few of them, and I'm going to try and do the exact same thing here as we speak, but the depreciation on these Cybertrucks is moving fast. You are seeing models now that are a year old that are falling by some 45% in some cases. And these are cars with like 6,000 miles on them, these Cybertrucks. I still see them on the roads here and there, but clearly not as frequently as maybe I would have anticipated. In terms of, I just went on Auto Trader and just said, hey, here in New England, what can I get a Cybertruck for? I'm not seeing any in the 60s, so maybe that's overstated in some of these pieces. The cheapest one that I'm seeing with under 20,000 miles is a used 2024 for sale with 12,000 miles at $72,000. But again, that is a 30+% discount off of what it was offered, and it is a 2024. Cars depreciate that fast.
Were those stories about the haircut people were taking on the trade-in, though? So they'll mark it back up when they resell.
True. Yeah, you're
so
right.
If you're seeing one for 72, they probably traded in for 58.
You're right. Yeah, that is a very good point, Mark, that, just because I can't buy one for 65 doesn't mean the dealership can't buy one for 65.
Maybe private party.
Yeah, that's... Well, we'll see how just how good these self-driving cars are in Austin.
You have to root for Tesla, right? I mean, an American company, an innovative product, one that's probably environmentally necessary and pioneered a lot of interesting technology. Whatever Elon's flaws, and his indulgences of things that probably weren't helpful for a visible CEO. You have to root for them, I think, don't you?
Yeah, an all-American-made car company that's innovating more than any car company has in 100 years. I do tend to agree. It's it can be sometimes entertaining to laugh at somebody's misfortunes, as Tesla has had plenty of them over the course of this year. But you're right. I mean, there are no car companies out there that produce more American than Tesla right now, and they are very much struggling to maintain that dominance.
I think you have to. I don't know. Now I'm second guessing the way I worded that. But yeah, just keeping, and it's hard to separate the company from Elon because he's so big a component of how highly it's valued.
Yep.
If he weren't there, it gets valued at GM or Ford's multiples or something like that, right? Which means it decreases by, well, let's just say a lot. I don't want to be alarmist. So I guess you can't separate the two. I'd love to be able to, though.
It is, well, I mean, plenty of Tesla owners are attempting to do so. I don't know how many anti-Elon Tesla owners I have seen bumper stickers on here in New England over the last few weeks. But sorry, that kind of went out of order there. But the Tesla Cybertrucks are not selling very well and not reselling terribly well from what we are seeing. We were talking before the break, Mark, about the new announcements on tariffs and the bond market reaction. As we mentioned, as we get updates on this, we will continue to update all of you. Scott Bessent, the president's Treasury Secretary, was on Fox News a bit ago and was asked, of course, about the tariffs and the new threatened 50% tariff on EU starting on June 1st. And Bessent's comments were, look, I think this is in response just to the EU's pace. And, quote, I would hope that this would light a fire under the EU, because his point elsewhere was that these deals are moving quickly. This is all a quote from Bessent. Quote, these deals are moving quickly, and I think as we approach the end of the 90-day period, we're going to see more and more of them announced. Quote, many of the Asian countries have come with very good deals. So the 90-day pause on reciprocal rates was announced on April 9th. That brings us to, July 9th is the approximate time frame. So around the July 4th holiday when these suspensions would end, and we're seeing an indication from the White House that the EU negotiations are not going as well as the president would hope.
One way to keep your sanity rather than trying to follow every twist and turn, which, again, I think is done deliberately for dramatic effect and to dominate the news, and it's quite effective from that point. If your objective is to be in everybody's head 24/7, then this is one way to do it. We're all going to be functionally lobotomized in 3 years. Effectively, but this is one way to dominate the news. Judge this in a year. Judge these policies in 2 years. Have trade deficits fall? Now, if trade deficits fall because economic growth is slowed, that's not good. Even I could do that. But judge their fiscal policy in a year. Is the deficit bigger or smaller? Is the economy growing faster or slower than it was when these folks took office?
Yeah, that's what I keep going back to is, were I designing a country's economic policy, I don't think I would be using tariffs to do so. But look,
because it's not 1873.
But look, I mean, the fact remains that no country has tested this out, and nobody actually knows how it would play out.
For that.
And so I've gone into this saying, look, let's just see how it goes. What I don't think is a good strategy in terms of see how it goes is complete lack of direction. And that is what was dissipating over the last 6 weeks and today has increased once again, is that uncertainty, that lack of direction, that cloudiness in terms of, I mean, Apple is the perfect example today. Where can I manufacture my stuff and not make the White House extraordinarily angry? And the answer seems to be Texas.
Right.
I mean, the United States, but that is seemingly the answer this morning, and I don't know, if you are Tim Cook, how you interpret that any differently.
Yeah, I'm a little less inclined to give them latitude with a let's see how it goes attitude, because anybody who's ever looked at tariffs knows they only benefit a very small number of people, namely people who make the stuff that the tariffs favor, domestic producers and people that work for them. They hurt everybody else, and they hurt economic growth on balance. So I'd be more inclined to go with the vast weight of the evidence. I don't need to see how that goes. That said, it's to keep your sanity. I think that's probably the best attitude. You can't be all wound up in a little ball every day, wringing your hands about tariffs, right? You'll go crazy.
Yeah.
With respect to these other policies, you drive yourself nuts. These other policies, we can give them a little. I have my doubts, but some of them are really good, like the announcement about expanding nuclear power today. Thank God a president is finally taking the lead on that. We've never had any leadership on nuclear. We haven't had leadership on nuclear energy in decades. That's a very positive move. It's positive for the environment. If that's your primary concern, it's certainly positive for economic growth. So that's in the plus column. Unfortunately, it's swamped by all of this tariff policy uncertainty today.
Let's take a quick break. When we come back, the GOP tax bill has passed the House, heads to the Senate now. Hopes are to get it done. Well, they've said before July 4th, I think more realistically before August 1st. Let's talk about what we know that's in there so far. That's next here on the Financial Exchange.
Text us at 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we are covering. This is the Financial Exchange Radio Network. Margaritaville Resort Cape Cod is perfect for your next New England vacation. Located just off Route 6 in Hyannis, the resort has everything you need to enjoy an incredible week with your family or a quick weekend getaway. Along with first-class accommodations and food, Fins Up Water Park is packed with aquatic adventures that will keep the kids entertained for hours. The summer season is coming soon, so make plans today for a fun-filled vacation at Margaritaville Resort Cape Cod. For more information and to book your trip, visit MargaritavilleResortsCapeCod.com.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. We pride ourselves on being able to support veterans in their time of greatest need, ensuring they receive the protections they deserve. For over 100 years, the DAV of Massachusetts has helped thousands of veterans with housing, transportation, and medical assistance, and you can help too. Please visit dav5k.boston and make a donation today. That's dav5k.boston.
The United States Virgin Islands is consistently voted one of the top Caribbean destinations, and recently, 2 of their beaches, Trunk Bay in St. John and Maggins Bay in St. Thomas, were voted a top 10 best beach in the Caribbean at the 2025 Traveler's Choice Best of the Best Awards. From the pristine beaches to its world-class dining, rich history, incredible golf, and perfect weather, the USVI has everything you need to make memories that will last a lifetime. From the moment you arrive, you will fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com today. That's visitusvi.com. Creating an estate plan can be a difficult process if you aren't working with an expert who can make sure your plan is secure. Cushing & Dolan can help. Call them today at 866-848-5699. Estate planning is their business, and their new monthly guide is called Detour Ahead, Estate Planning Blunders to Avoid. Don't put your assets at risk and open yourself up to severe tax consequences. Even if you already have a plan, this guide may correct an issue that could come back to haunt you in the years to come. Proper estate planning is crucial to you being able to enjoy your later years, and it may be the difference between retiring comfortably or living under incredible financial pressure. Call Cushing & Dolan right now at 866-848-5699 and get your free guide today. That's 866-848-5699, or request it online from their website, legalexchangeshow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Celebrate the arrival of summer with the best of what's local and fresh. Farmers markets across Massachusetts are packed with vibrant produce, pasture-raised meats, local seafood, small batch cheeses, and artisan-made goods. From ripe strawberries to artisan finds, markets are the soul of our neighborhoods. Stop by your community market and support farmers and local makers. Sponsored by Mass Farmers Markets, helping grow farmers markets across the state. Find your local market at massfarmersmarkets.org.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
The GOP tax bill has made its way through the House, now heads over to the Senate, where I'm guessing it'll look very different than it did passing the House. But we have a few things that are clearly going to be front and center, and the SALT cap is one of them that applies especially here in New England to a lot of taxpayers. The SALT cap stands for state and local taxes. You used to be able to deduct those. There was no limit on how much you could deduct them. So, imagine you own a home in Boston as well as on Nantucket, and you're making $1 million a year, paying $100,000 in property taxes plus another $100,000 in income taxes to the Commonwealth of Massachusetts because you are quite wealthy. You would deduct all of that against your federal income tax return and save quite a bit of dough on those deductions. The rules under the first Trump administration changed all that. They said, look, you are going to be able to cap that out at 10%, at $10,000 rather, of state and local tax deductions. There's been a bunch of loopholes that have been created. For instance, if you own your own business, you're able to now pay your Massachusetts income tax bill personally through that business in many cases and still get the deductibility. But nonetheless, there have been a lot of lawmakers in high-tax states that have pushed for some changes here, and the change seems to be that cap is going up. Where it ultimately lands, I think, is anybody's guess, but I've been getting the question of, hey, what does this actually mean for me? And quite honestly, the answer is oftentimes nothing. And so I think it's helpful to go through all of this in terms of how it works. When the first Trump tax bill passed, a lot of people that used to itemize started taking the standard deduction, and that standard deduction is pretty big these days. For a married couple, under the current law, it's $30,000, and if it's an older married couple over the age of 65, it's even higher, and the House bill wants to bump that even more. So hypothetically, we could end up in a place where the standard deduction for a married couple in 2026 is, somewhere in the high 30,000 range for an older married couple. So if you're wondering if the SALT changes make any difference for you, what you'd be asking is, okay, what are my deductions? What sort of things might I be able to claim on my tax return? Any property taxes, sales taxes to the state, and income taxes to the state would, be potentially deductible up to that $40,000 limit. If you had big medical expenses in any one year, there's some rules there around, whether or not you can deduct those. You may make charitable contributions, and those could be deductible. But you still have to ask yourself, okay, if I add all that stuff up, is it going to exceed the standard deduction? And I think the answer for a lot of people is probably not. And for a lot of people, even in the New England area, they're going to continue to take that standard deduction off of their tax return, would be my guess. But yeah, there are some payers in these states that will benefit, but it's probably not that person making $20 million because they also are capping this out in terms of income. So they're not going to allow the person making $20 million to increase this cap. Where I bring this up and why I think it matters is less about the SALT cap in particular, but more about taxes and retirement and how to navigate these things. And look, there's been a lot of tools created over the last 2 decades to make investing a little bit more seamless, affordable, and pretty clear, right? I mean, Fidelity, Vanguard, all these companies have, easy to use tools where you can talk about how far away you are from retirement and they will auto select some portfolios from you. But where things get a little bit trickier is when you start taking that money out. And for a lot of retirees, especially here in New England, they might have some cash that they had received as an inheritance, or they sold a home and have some cash sitting on the sideline. They may have contributed to a Roth account as well as a traditional account over time. And so they might be sitting in a position where they have 3 different buckets of money that have completely different tax status. And where I run into it all the time is, okay, I am finally doing that big renovation on my home in retirement. I'm going to need to come up with $100,000. Where do I take it from? That is a really difficult question to answer that has almost everything to do with taxes and not investments. And these types of things come up all the time. I see it. It's one of the most common mistakes I see people seeing is, where do I pull money out from? At what stage of life? And where should I be contributing new money into when I am still working? It's not that people aren't great savers. We've talked about how that's not the case for America as a whole, but plenty of people are good at setting aside the money for their retirement, but where to put it and then which order to take it out in is really, really complicated and has everything to do with our ultra complex tax code, not only at the federal level, but at the state level too. If you have questions along these lines, you're trying to figure out not just how do I invest my funds for my future, but what tax strategies do I use once I get there? Give the folks at Armstrong Advisory Group a call. This is a core to any basic financial plan, and it needs to be comprehensive and affect you personally. The number is 800-393-4001 for the Armstrong Advisory Group. Again, that number is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Chuck has brought this story up a couple of times, and I'm skipping forward here a little bit, Mark, so I'm guessing you're not prepared, but I found this statistic.
It's never stopped me before, Mike.
I guess unsurprising. But really, really concerning and disheartening. It's all about gambling and sports gambling in particular. All relatively new to the American public. We've had legalized sports gambling, I think, just in New Jersey and Nevada for decades now. But now some 30-plus states having legalized, it is gaining traction quite quickly. According to this story, 48% of American men under the age of 50 have an account on a sports betting app. Nearly half of American men have an account open on one of these sports betting apps. That is terrifying. I'm fully in favor, by the way, of legalized sports gambling and other types of gambling. It's kind of like a voluntary tax, but there are about to be some serious, serious financial problems for those American men under 50 who are doing so. Quick break. A lot more to cover in the second hour of the Financial Exchange. We'll be right back.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, grandmothers, and amazing women out there doing it all,
visit GoRedForWomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818. Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
This is the Money Matters Radio Network. WBNW 1120 AM and W275 CM FM. Concord, Boston. The Money Matters Radio Network.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much. And they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine, no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
The United States Virgin Islands is consistently voted one of the top Caribbean destinations. And recently, 2 of their beaches, Trunk Bay in St. John and Maggins Bay in St. Thomas, were voted a top 10 best beach in the Caribbean at the 2025 Traveler's Choice Best of the Best Awards. From the pristine beaches to its world-class dining, rich history, incredible golf, and perfect weather, the USVI has everything you need to make memories that will last a lifetime. From the moment you arrive, you will fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com today. That's visitusvi.com.
It happens all over Massachusetts. In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Margaritaville Resort Cape Cod is perfect for your next New England vacation. Located just off Route 6 in Hyannis, the resort has everything you need to enjoy an incredible week with your family or a quick weekend getaway. Along with first-class accommodations and food, Fins Up Water Park is packed with aquatic adventures that will keep the kids entertained for hours. The summer season is coming soon, so make plans today for a fun-filled vacation at Margaritaville Resort Cape Cod. For more information and to book your trip, visit MargaritavilleResortsCapeCod.com.
Hi, it's Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled Trusts in Your Financial Plan. Mike, a lot of times when we talk about financial planning, it's with the idea of having your money available to you to use when you need to use it. How do trusts work to kind of keep that idea going, not just for yourself, but also for the next generation as well?
Sure, and it doesn't always need to be the next generation, because how many times have you heard somebody say, hey, look, I raised my kids, they're in a good spot, I want the less check I write to bounce. I'm spending this money. But, there can be situations where trust can benefit even a married couple in the event of a lawsuit or a nursing home that's unexpected, especially if there's a big age gap. That can be critical. But for next generation planning, it gets much more common, and especially in the New England area where most states have an estate tax, there's a lot that can be done from a multi-generational planning perspective to, if not eliminate those taxes, at least mitigate them to a large degree. I mean, you think about here in New England, the value of your primary residence, which you sell, it might not be subject to capital gains tax, but if you die, is most certainly subject to estate taxes. There's a lot that can be done in the way of trust planning.
Our guide this month is titled Trusts in Your Financial Plan, and you can request it by calling 800-393-4001. Again, that number is 800-393-4001, and the guide this month is titled Trusts in Your Financial Plan and details a number of ideas about how you can fit trusts into your financial plan.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Mike Armstrong and Marc Fandetti. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Mike Armstrong and Marc Fandetti.
Morning, welcome back to the Financial Exchange. It's a Friday before Memorial Day weekend here. It's Mike, Mark, and Tucker with you. And we have what I would normally call a pretty severe market sell-off going on, but context is important here. You've got the Dow off about 350 points, 0.8%. The S&P off 59 points, or a full percentage point. And the NASDAQ off 1 1/4 as we open up the show today. All of this on the heels of President Trump's announcement, or I don't know that they are official announcements at this point. It's a threat of tariffs on both the European Union and Apple specifically, which is, again, I get, but you're probably not actually targeting Apple here. I'm guessing you are targeting all electronics companies, but we will see. The European Union is set to face tariffs of 50%, is the, again, implied threat from the White House on the European Union goods coming into the United States. Apple allegedly facing a 25% tariff on their made products overseas after the president had previously expressed some skepticism and frustration with Apple in their plans to move production from China to India. At the same time, you had Scott Bessent specifically call out India as a country where they are pretty close to a deal on a trade deal with. So again, confusing to me there what the priorities are, but clearly the president not liking the idea of more iPhones moving production over to India instead of here to the United States. Why I say context is important in terms of the markets is because, quite honestly, if investors believed that Apple was going to be facing 25% tariffs on pretty much every product they sell in the United States, I would think their stock would be off a lot more than 2.75%. Likewise, if investors thought that airlines were going to be paying 25% tariffs on Boeing planes and imported Volkswagens and all sorts of stuff made over in Europe, I just don't think that the U.S. markets would be selling off only 1%. So a modest sell-off, I think, on, quite honestly, credibility concerns when it comes to this White House and tariff plans.
I think, my comments in the last hour, and thanks to those of you who texted in, your texts are funny. And I want to say I don't have Trump derangement syndrome. I have tariff derangement syndrome. Really. Trump did a good job on nuclear power today. I mentioned that. So I want to reiterate that. I'm judging things based on policy and their likely effects on the economy. These erratic tariff moves engender uncertainty. They thus hinder long-term growth. Nobody is standing up for free markets and the rule of law. That used to be those used to be traditional Republican issues. They no longer are. That's what I was lamenting. Just because you put a picture of Ronald Reagan behind you and sign things that vaguely resemble things that were done during his 2 terms doesn't mean you're faithful to those principles. Principles which many would argue helped economic growth immensely in the 1980s. They had some drawbacks, but helped them. It would be nice if somebody were following that model or at least defending it. Nobody is. But to your point, markets maybe don't believe that these tariffs will ever actually be enacted.
And danger there from a few perspectives. One, the last time investors were really doubting the president, in my mind, was back in February and March of this year when they said, no, this isn't going to happen. It's not going to happen. And then the entire world was surprised on April 2nd when it happened.
But it happened for like 5 minutes.
It happened for 7 days, yeah. And so this is where some of the credibility stuff comes from. But to that point, I won't be surprised if this stuff ends up becoming official, at least for a period of time, so the president feels as though, hey, I've regained some of this credibility in negotiating tactics. But again, I don't know how you can believe that with what's happened with China.
I think this is the last time we'll see. I think Congress retakes this power as soon as they're able to. Whether it's because there's a new. You think so. Well, if the other party takes Congress in 18 months, they almost certainly will. Yeah. I think Republicans would probably like this power back too. It was never intended that one person be able to impose taxes.
I think,
other than in emergency.
Hypothetically, they would like this power back, but not under a Trump
I
White House.
This Congress. Well, there's guys like Rand Paul and a couple of others who've been vocal. But you're probably right, Mike. Not this Congress with this president, but soon enough, Congress will take this power back. I don't think we'll ever have to experience these types of policy gyrations again.
We'll see. Yeah, we'll see. I mean, heck, the Supreme Court could hypothetically slap this down. This is on their docket in terms of, hey, does this operate within the emergency confines of the president's powers when it comes to tariffs? And seemingly so far the answer is yes, but that could all change. Obviously, Congress could change it, but we ask this question frequently, which is, when it comes to policies like tariffs or any executive power at the White House, I always ask myself, if the person that I thought was least well-equipped to handle the economy was in charge of these things and had these powers, would I feel comfortable? And I think, generally speaking, the American public has shown, hey, we do have some faith and confidence in President Trump's ability to navigate this. He wouldn't have been elected otherwise. Imagine for a moment that instead of him, it is Elizabeth Warren or whoever you consider to be the boogeyman of politics these days, in the same position with those same powers. And I think you get at why we raise these concerns. I generally don't think policy should be executed from the White House, especially this type of policy. So, but in any case, it is Today, this is the rule, and today you've got markets suffering at the behest of the White House's push on tariffs this morning, which, again, 50% on products coming from the European Union, 25% on, again, products made by Apple. I have to assume that would apply to Samsung, Google, and other electronics manufacturers that manufacture overseas.
Yeah, just accept that less trading means lower standards of living, full stop. I mean, any country that's ever been looked at before and after, that's been the conclusion. So you may, for, I guess, political or personal preference reasons, like the idea of making more stuff here. But
how does China fit that narrative? Because China has been the story of a country that has imposed massive barriers to trade now for some 50-odd years. I think you could easily make the argument that they would have been better off had they opened up, but we don't have that example. Instead, we have a country that has developed and vastly improved most terms that we would describe as standard of living in mainland China.
They'd be better off if they did allow more imports in, if their people did consume more.
So their quality of life would have improved more.
Yeah,
so.
Their model is not all that different from other Asian countries that industrialized in the 60s through the 80s, and even right through the 90s, where the phrase Asian tigers was used a lot. They practiced more or less very high savings, both compelled and cultural, with an emphasis on export industries. They were able to do that because they imported technology from us and imported capital from...
Imported is a delicate way of describing it.
Yeah, I wouldn't accuse them. I mean, China pushes the boundaries of respecting intellectual property. Okay, they do a lot of theft, I guess. I don't know, not really my area. But Asian economies, China included, followed a certain model: rapid industrialization, focus on export industries, discouraging consumption because they needed those savings to grow fast. And some of those savings came here, which in turn allowed us to consume more than we made. It was a pretty beneficial arrangement overall. And if you don't believe that, just look at growth rates or think about, if you're old enough, standards of living and how they've
evolved over the last 60 years.
Yeah, largely favorably.
Let's take a quick break. When we come back, we're going to be doing a little bit of trivia, but then we are also joined by Dan Griggs. He's the Executive Vice President and Regional President of Commercial Lending at OceanFirst Bank, talking to us about the summer season, tourism, and what they are seeing at their bank when it comes to the New England economy. That's next here on the Financial Exchange.
Text us 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we're covering. This is the Financial Exchange Radio Network. Creating an estate plan can be a difficult process if you aren't working with an expert who can make sure your plan is secure. Cushing & Dolan can help. Call them today at 866-848-5699. Estate planning is their business, and their new monthly guide is called Detour Ahead: Estate Planning Blunders to Avoid. Don't put your assets at risk and open yourself up to severe tax consequences. Even if you already have a plan, this guide may correct an issue that could come back to haunt you in the years to come. Proper estate planning is crucial to you being able to enjoy your later years, and it may be the difference between retiring comfortably or living under incredible financial pressure. Call Cushing & Dolan right now at 866-848-5699 and get your free guide today. That's 866-848-5699, or request it online from their website, LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Trust can play a key role in your financial strategy, and understanding the different kinds and their purpose may help you make the right decisions for your overall plan. Hi, this is Chuck Zada from the Armstrong Advisory Group. Trusts are utilized for a variety of reasons, but the most basic use is to make settling an estate easier. Trusts have the ability to bypass probate, which can save you significant time and money while allowing your assets to be distributed directly to your beneficiaries. Our new guide this month is called Trusts in Your Financial Plan, and you can get it by calling 800-393 800-393-4001. Learn about trusts and their possible benefits to your financial strategy by requesting your free guide today. That number again is 800-393-4001, or request it online at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. New Englanders love the Caribbean, and now there's a Caribbean travel channel available for you to learn all about Caribbean culture while you're planning your next trip to your favorite island. The TravelShareIt.com marketplace is loaded with information about the arts, festivals, food, and music throughout the Caribbean, and is an interactive website featuring daily travel deals to any island of your choice. Book your next Caribbean vacation on the most comprehensive travel channel for the islands, TravelShareIt.com. That's TravelShareIt.com. There are critical mistakes you can make during the estate planning process that may have a damaging effect on your financial strategy. Cushing & Dolan's new guide is called Detour Ahead, Estate Planning Blunders to Avoid. Get yours today and make the right decisions to protect your assets. Call 866-848-5699. That's 866-848-5699, or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
Is it a stroke? Even if you're not sure, act fast and call 911. Signs can include face drooping on one side, arm weakness, speech difficulty, or not making sense when talking. Time is critical. A stroke requires immediate medical care, which starts as soon as the ambulance arrives. So if you see any sign of stroke, act fast and call 911. Visit mass.gov/stroke, sponsored by the Massachusetts Department of Public Health.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by Margaritaville Resort Cape Cod in Hyannis. Looking for a great vacation spot? Look no further than Margaritaville Resort Cape Cod. Located just off Route 6, Margaritaville Resort Cape Cod is perfect for a weekend getaway or fun-filled family vacation. You'll enjoy first-class accommodations and dining, our incredible fins-up water park, and of course, the gorgeous pageantry of the Cape. Visit Margaritaville ResortsCapeCod.com for reservations and more information.
Joining us now is Dan Griggs. He's the EVP and Regional President of Commercial Lending at OceanFirst Bank, and joins us today to talk a little bit about the tourism sector here in the New England area and what we are seeing. Dan, thanks for joining us.
Hey, Mike. Good morning. Pleasure to be here again.
So Memorial Day weekend, unofficial start of the summer here, and I would imagine hotel owners, Airbnb owners, and anyone even marginally attached to the tourism industry here in New England is just wondering how it shapes out this year. What are you hearing from business owners when it comes to the big summer tourism season here in New England?
Yeah. So I reached out to two clients. One was a hoteler, and the other's ferry service. And the hoteler, they have 50-plus, sites across New England. The first thing they said is, look, Dan, is you got to separate out urban versus suburban.
Okay.
Suburban is a little soft. Their pre-bookings occupancy were down low single digits. Urban is in an airport where we're level to last year. So now, with the suburban, go ahead. I'm sorry.
I was going to ask you, what can we attribute the suburban to? Is the suburban typically, your business traveler going out to Waltham, Massachusetts for a client that they're consulting with? What's the typical traveler on a urban versus suburban hotel booking?
They think it has a little bit to do with Canada, and less people coming down to Canada for New England, and group sales. So they're re-engaged. What they told me is they're re-engaging kind of the marketing team, and they think they'll be okay for the year in terms of occupancy. With last year, they'll start offering stay 2 nights, get a third night 50% off. So they think occupancy on this run will be level with last year. Just their ADR, average daily room rates, will be down a little bit.
Okay, so if I'm looking for a deal this summer on a hotel, I'm more likely to find one in a maybe less urban area across New England rather than downtown. What about on the Cape? I mean, obviously, massive Cape and Islands, massive tourist destination for travelers across the globe. Are you hearing anything particular about bookings there?
Yeah, well, I'll just tell you. So our ferry operator has both tourism ferry and commuter ferry.
Okay.
When I talked to him, he talked about his tourism is up 7% pre-bookings year to date.
Tourism
He
is
said,
okay.
What's that? Yeah, he said that he looked at Google Analytics. In Canada is down, but Europe is up, led by Ireland. So tourism bookings on the ferry is up. The other thing he noted is on his commuter ferries. He said we are at pre-pandemic levels of people coming to the city. He said that the sequence is off, meaning Monday through Thursday pre-pandemic were all pretty the same, and then Friday dropped off. He says Monday through Wednesday are strong, higher than pre-pandemic. Thursdays a little less, and then Fridays are really a lot less. So just the sequencing of the commuters traveling has changed.
Interesting. And do either of them have a read on, hey, we are clearly seeing some downturn in Canadian tourism to the U.S. Where is that being made up? Is it domestic tourism? Is it European travelers coming to the U.S.?
Yeah, it definitely has affected. Not huge, but it's being supplanted by European travelers.
Okay. Well, on the announcement this morning, obviously 50% tariffs on the entirety of the European Union. We'll see how that. Whether or not that sticks, it's a little bit late, I suppose, to be changing travel plans. But that could obviously disrupt things if they are the ones buying up that excess capacity right now from the lack of Canadian travels. We'll have to see how that plays out.
Agreed, certainly.
Dan Griggs from OceanFirst Bank, join us to talk about the regional economy in New England when it comes to tourism, especially, and I think some surprising good news there from what I just heard from Dan. Thank you, Dan. Appreciate it coming on, and we'll talk to you again soon.
My pleasure. Have a good weekend.
All right, time for trivia here on the Financial Exchange, and today is former SNL cast member Tim Robinson's 44th birthday. Robinson worked on Saturday Night Live from 2012 to 2016 as a cast member and a writer. After SNL, Robinson created 2 shows, Detroiters and I Think You Should Leave. Robinson is currently starring in a movie with Paul Rudd that is in theaters as of today. So, trivia question today. What is the name of Tim Robinson and Paul Rudd's movie in theaters right now? Once again, what is the name of Tim Robinson and Paul Rudd's movie in theaters right now? Be the third person today to text us at 617-362-1385 with the correct answer, and you win a Financial Exchange Show t-shirt. Once again, the third correct response to text us at 617-362-1385 will win that t-shirt. See complete contest rules at financialexchangeshow.com.
We have a couple of stories here regarding nat gas and utilities here in New England that I think are worthy of discussion. The one from the Boston Globe speaks about utility bills climbing and some of the root causes and possible fixes here. My answer is that they don't provide much in the way of possible fixes, because the possible fixes are either eliminate a bunch of subsidies or bring down the cost of energy. So, the subsidies, though, I think are worth discussing for a moment here. Mass Save is one of those. I had a Mass Save representative in my home just this week, taking a look, seeing if there's anything we need to do on insulation or other areas of the home. That person's not free. He was well-educated in the subject. He knew what he was talking about, and he spent a couple hours of his time looking around my house. That is paid for by people's utility bills, and the Mass Save piece of this overall program, which started it started in, I think, 2008, Mass Save did, with the overall goal of, hey, we're going to add some costs to utility payers in order to try and bring down consumption of energy across New England, across Massachusetts. It was about $356 million in costs in 2010. That's ballooned to now $1.5 billion in 2024. That was the first 3 quarters of 2024 was an annualized rate of $1.5 billion. That goes right onto your utility bills. So, if I get a tax credit for the boiler that I put in from Massachusetts via Mass Save, that's coming on somebody else's utility bill. If I have somebody come to my house to look at my insulation from Mass Save, which is a free service, and they give me some light bulbs, and I think he gave us some free power strips. Again, I don't need free power strips, but I got 2 free power strips as part of my Mass Save program. That's going on your bill. The one that I thought was absolutely crazy, the governor's plan proposes that utilities could now issue bonds to stretch out each year's bill for Mass Save and a few other programs over 20 years. So what you're saying is, hey, we want to keep all of these programs in place, not cut their costs, but just borrow the money to fund them.
Why can't we impose income requirements on Mass Save subsidies?
I have no idea. I should not be able to get free power strips.
No, you definitely shouldn't. I shouldn't. Anybody with gainful employment shouldn't. And I've done it too. They're in my house replacing light bulbs.
It's free. Why wouldn't I do that?
No, you're right. You'd be a sucker not to. But it's utterly unfair, probably inefficient.
I don't think we're going to go touching low-income subsidies, right? If somebody can't afford to pay their power bill, we're not going to let them freeze. We might shift where it goes, but that's another area that's brought up.
Politicians behave like resources aren't scarce.
Yeah. The solutions here are silly. If you want to bring down power costs, stop shutting down nuclear power plants, bring in pipelines that everybody hates, and you'll be able to do so, and power won't cost 30% more than everywhere else in the country. Quick break. Trivia winner when we come back.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Congratulations to the students and staff of Emergence Academy in Springfield, Massachusetts for their winning submission to the state's Power of Presence initiative. The school's amazing video will help spread the word about the power of students being in school every day. To see the video and learn more, visit us at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
The United States Virgin Islands is consistently voted one of the top Caribbean destinations. And recently, 2 of their beaches, Trunk Bay in St. John and Maggins Bay in St. Thomas, were voted a top 10 best beach in the Caribbean at the 2025 Traveler's Choice Best of the Best Awards. From the pristine beaches to its world-class dining, rich history, incredible golf, and perfect weather, the USVI has everything you need to make memories that will last a lifetime. From the moment you arrive, you will fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com today. That's visitusvi.com.
A solid financial plan has many layers, and trusts are often a core piece. Hi, this is Mike Armstrong from the Armstrong Advisory Group. Understanding the various kinds of trusts that exist can be extremely beneficial to your strategy. If you're retired or nearing retirement age, a trust may help you with a wide range of issues, such as asset protection, tax efficiency, and avoiding probate. Call us today at 800-393-4001 and ask for our new guide called Trusts and Your Financial Plan. We'll discuss a number of different trusts and the areas in which they may help and how to determine which which one may be right for you. Even if you already have a trust in place, this guide can provide a description of certain issues that may arise and could help you decide if changes are needed. Call us today at 800-393-4001 and get your guide today. Or you can request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke with your Financial Exchange Quick Tip of the Day. And today we're talking about the top estate planning mistakes to avoid. Todd, what is the downside of adding your kids to your accounts or adding their names to your real estate deeds as a joint owner? Won't this avoid probate?
You're absolutely right. It would avoid probate, but there are better ways to avoid probate than just doing something simple, right? It's not, simple isn't always better. Throwing a name on an account or adding a designated beneficiary or a joint owner on a piece of property might not be the best way to go. Here's the problem. If you name one of your children as a joint owner and you have 3 children and you put that child on just because it's convenient and they're geographically close to you, well, you could be accidentally disinheriting your other children because this property, this asset will only go to that child. That child doesn't have to give it to the other kids. So that's a problem. And if you put your name, if you add a child's name to your real estate, now you're exposing it to that child's creditors, that child's potential divorces. That's never good. And plus, you've lost control over it. If you try to sell it, you need that kid's permission, and half the money would go to that kid. Please, folks, set up a trust, fund your trust much better than just trying to do it shorthanded and just give away assets or adding names to accounts.
Todd Lutzke and the estate planning experts at Cushing & Dolan have written a brand new guide that details the estate planning blunders to avoid. You can request this brand new guide by calling 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. The Financial Exchange Show podcast drops every day on Apple, Spotify, and iHeartRadio. Hit that subscribe button and leave us a 5-star review. You're listening to the Financial Exchange Radio Network.
My trivia question today was, what is the name of the movie starring Tim Robinson and Paul Rudd currently in theaters? I think it came out today, actually. That would be Friendship, and that has an 89% on Rotten Tomatoes, and I've heard it's the return of the rated R movie, Mike, which has been missing for the past 15 years or so.
I do generally enjoy just about everything that Robinson makes.
Yeah, he's hilarious. Winner. Bill from Easton, Mass. is our winner today, taking home a Financial Exchange Show t-shirt. Congrats to Bill, and we play trivia every day here on the Financial Exchange. See complete contest rules at financialexchangeshow.com.
In a non-ruling by the Supreme Court, I don't know how to phrase this one, but in a kind of strange ruling by the Supreme Court, they have made statements that seem to insulate the Federal Reserve more from the president's ability to fire them. Here's what's been going on is the president has removed the heads of several independent agencies of the federal government, and they have been suing both for, hey, is this actually cause that you've removed us for? And also they have brought the cases to the Supreme Court trying to stay those removals, stating, hey, the president doesn't actually have this power. And one of the arguments they made was, look, if you allow him to do this, then he is therefore allowed to remove the head of an independent agency, quasi-government agency, like the Federal Reserve, which is a very unique agency insofar as it is a independent central bank and also government agency. It's a quasi-government agency as it gets described. So the Supreme Court, however, ruled in favor of the White House in this case and said, no, look, they can proceed with the removal. The lower court cases, which still are trying to determine is it actually for cause and therefore can they be removed for those reasons, will play out, but they weren't going to stay the removal itself. However, in that ruling, They also spoke about the Federal Reserve in particular, and I'm trying to find the exact, the majority said the Fed was different because it is, quote, a uniquely structured quasi-private entity that follows in the distinct historical tradition of the first and second banks of the United States. This therefore suggested that the Fed officials lay beyond the president's reach in terms of removal. So it's, again, interesting to me because it's not a ruling. They have not definitively come out and said that the Federal Reserve is protected from removal from the White House. But they have sent a pretty strong hint that if this were to be brought in front of them, they might rule in favor of Jay Powell or whatever Fed governor they attempted to remove.
So I'm not qualified to comment on the legal intricacies.
Nor am I.
I feel very comfortable, though, saying that every researcher who's looked at central bank, meaning the Fed, the European Central Bank, Bank of Japan, that's just a general term, that has looked at measures of central bank independence relative to outcomes like inflation, which we all agree, I think, is an important variable for the Fed to get and keep under control. Arguably, it should be its only mandate, but that's just because I'm a hard money anti-inflation fanatic. There are plenty of people who think the Fed should have its eye on other balls as well. I don't think that's worked out too well. But anyone who's ever looked at central bank independence, meaning you appoint somebody who's a credible inflation fighter and you let them do their thing, and not everybody follows that philosophy, of course. Anybody who's ever looked at this has concluded that central bank independence, I won't say it's a prerequisite because it's always hard to get the chicken egg arrow right.
Yep.
Because those countries might have been disciplined. Those countries' governments might have been disciplined.
They may have
inflation
had
fighters
better
to begin with. Better
other
governance.
Controls and better governance in the first place.
There are always other
central bank
factors that you have to control
True.
for in these analyses. I will say no one has ever come up with a convincing case that the head of the central bank should be whimsically removed or should be under the thumb of some politician whenever that has happened anywhere, including here.
Including the
in
United States.
1969, 1970, when Nixon pressured his buddy Arthur Burns, who he made. Arthur Burns was like the Lawrence Summers of his, that may not be the best analogy, but he was a prominent, respected business cycle theorist and practitioner. Like, there was nobody with better credentials than Arthur Burns. His name gets run through the mud today. But it's important to keep in mind what a revered figure he was, and at least in economic circles then. He botched it at the Fed. His name is now synonymous with how not to run a central bank. That is in part because Nixon pressured him to keep money easy. Even Ronald Reagan, who I revere and many other people, maybe many people listening to this show revere, his administration, not him directly, put a little pressure on Volcker. Jim Baker poking Volcker in the chest. Don't you raise rates. Volcker saying, hey, buddy, I wasn't going to. Don't worry about it. My point is, it took us decades, Mike, to get to this point, and it would be a tragedy if we sacrificed central bank independence on the altar of short-term expediency. It would be, that sounds like a very grandiose thing to say, but I just mean keep politicians out of it. Appoint somebody with credibility.
And the Supreme
Court,
Court,
do their thing.
Again, this is not a ruling. It does not forbid the Trump administration from doing so, but rather sends a shot across the bow saying, if this were to end up in front of us, this is likely how we would view it, is my read.
Trump is erred here in that he's already compromised whoever he will appoint in a year. He's already made it clear what he's looking for in a central banker. That is somebody who will lower interest rates when he says lower interest rates. That is not helpful for long-run price stability. Trump has some good, much better qualified than I am, Harvard PhD type economists, directly accessible to him. I suspect they're telling him this. Kevin Warsh, who's thought to be his likely nominee to replace Jerome Powell, has good inflation fighting credentials. I'd call him a hard money guy. He puts inflation above anything else, as I think a central banker should. That would be a good choice as long as Trump doesn't make the mistake of hamstringing him by making it some sort of requirement that he bend to Trump's will in advance. I hope that doesn't happen for all of our sakes.
The United States Virgin Islands is consistently voted one of the top Caribbean destinations, and recently two of their beaches, Trunk Bay in St. John and Megan's Bay in St. Thomas, were voted a top 10 best beach in the Caribbean at the 2025 Traveler's Choice Best of the Best Awards. From the pristine beaches to its world-class dining, rich history, incredible golf, and perfect weather, the USVI is everything you need to make memories that will last a lifetime. From the moment you arrive, you'll fall naturally naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com today. That's visitusvi.com.
The White House has announced that the penny is going to stop being minted next year, the end of an era. A bunch of really funny posts, by the way, from people named Penny. Penny Lee, the president and CEO of Financial Technology Association, said, well, this is awkward. I guess I have no one to blame but myself, given that I work for the fintech industry. Hopefully people won't retire me. But the penny is going away. As it's been highly publicized, it costs about 4 cents to make a penny. I think this is a purely logical and good idea to do away with the penny, given how few transactions are actually conducted with cash these days and the annoyance of pennies in general.
I've not heard a good argument for keeping the penny. Have you? Other than like nostalgic or sentimental arguments?
Frankly, I haven't even heard a single argument for the penny from anyone other than a lobbyist for the penny industry.
No, let's just do away with the nickel while we're at it.
Sure.
Yeah.
Go away.
Why not?
Yeah.
And daylight
Dime.
savings time.
Here's my only question.
Quarter you can keep.
I go to 7-Eleven, I buy a pack of gum. They ring me up and it costs $3.67. I go to pay with my credit card. Am I charged $3.67 or am I charged $3.70?
I don't know.
I'm going to say they round up.
Same question if I go to pay for a penny. Do I have a different actual transaction price if I'm paying via a digital means versus cash?
No is the short answer, right?
I don't. Nobody's told me. I don't think necessarily. It could very well be that 7-Eleven says, yeah, for all cash transactions, round down to the lowest 5 cents, but for all digital transactions, charge the actual penny transaction. Because what are we going to do? Like across financial institutions, just start rounding up interest and everything else?
Oh, economists are going to go crazy studying how quickly people adjust their prices because
Yeah.
price stickiness is a huge research. Well, it's not like new, but it's an interesting research area.
So
those are my only people excited about this.
And this is not a worthy conversation of not doing away with the penny, but I'm just curious. You know, if I go and buy that pack of cigarettes or pack of gum, and with the sales tax, I don't. I don't know why I'd be buying a pack of cigarettes. Like never smoked a cigarette in my entire life.
Honey, it's just for research. Yeah, but you smoked all 20.
What do you mean?
We just bought a Sienna. Stinks like cigarettes now.
Let's take a quick break. When we come back, Paul LaMonica join us to talk about the AI wave and IBM. That's next here on the Financial Exchange.
Missed one of our shows? Catch up anytime by asking your Alexa smart speaker to play the Financial Exchange. This is the Financial Exchange Radio Network.
Trust can play a key role in your financial strategy, and understanding the different kinds and their purpose may help you make the right decisions for your overall plan. Hi, this is Chuck Zada from the Armstrong Advisory Group. Trusts are utilized for a variety of reasons, but the most basic use is to make settling an estate easier. Trusts have the ability to bypass probate, which can save you significant time and money while allowing your assets to be distributed directly to your beneficiaries. Our new guide this month is called Trusts in Your Financial Plan, and you can get it by calling 800-393-4001. Learn about trusts and their possible benefits to your financial strategy by requesting your free guide today. That number again is 800-393-4001, or request it online at armstrongadvisory.com. That's armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Creating an estate plan can be a difficult process if you aren't working with an expert who can make sure your plan is secure. Cushing & Dolan can help. Call them today at 866-848-5699. Estate planning is their business, and their new monthly guide is called Detour Ahead, Estate Planning Blunders to Avoid. Don't put your assets at risk and open yourself up to severe tax consequences. Even if you already have a plan, this guide may correct an issue that could come back to haunt you in the years to come. Proper estate planning is crucial to you being able to enjoy your later years, and it may be the difference between retiring comfortably or living under incredible financial pressure. Call Cushing & Dolan right now at 866-848-5699 and get your free guide today. That's 866-848-5699 or request it online from their website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. The United States Virgin Islands is consistently voted one of the top Caribbean destinations. And recently, 2 of their beaches, Trunk Bay in St. John and Maggins Bay in St. Thomas, were voted a top 10 best beach in the Caribbean at the 2025 Traveler's Choice Best of the Best Awards. From the pristine beaches to its world-class dining, rich history, incredible golf, and perfect weather, the USVI has everything you need to make memories that will last a lifetime. From the moment you arrive, you will fall naturally in rhythm with the heartbeat of the islands. There's no money to exchange, and travel from New England could not be easier. Whether you're looking for a romantic getaway or a family vacation, the U.S. Virgin Islands is the perfect place for your next adventure. Go to visitusvi.com right now for more information and to book your trip. The USVI is America's Caribbean paradise. Go to visitusvi.com today. That's visitusvi.com.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
If you missed any of today's show, catch up whenever you want on our YouTube page. Find daily show segments and full shows. Just go to youtube.com and search for The Financial Exchange. This is your home for breaking business and financial news. This is the Financial Exchange Radio Network.
Ladies and gentlemen, the weekend.
Well, with Memorial Day approaching, now's a great time to register for the DAV 5K, taking place on Saturday, November 8th at Fort Independence on Castle Island. The race has sold out each of the past 4 years, and slots are continuing to fill up quickly, so don't delay. Visit DAV5K.Boston, reserve your spot, or join our team here at the Financial Exchange by registering under Team TFE. That's Saturday, November 8th for this year's DAV 5K. Sign up now at DAV5K.Boston.
Joining us now is Paul LaMonica from Barron's, here to talk to us about what I think might be the least discussed AI play out there, good old IBM. Paul, thanks for joining us. Happy Friday. Talk to us about IBM stock, because kind of under the radar for me. It's up nearly 20% so far this year.
Yeah, it's amazing. IBM, Big Blue, the best performer in the Dow. And as you accurately pointed out, I think investors have finally realized that there is growth in the software and services business. AI is a big part of that. The cloud as well. They have products and services like Granite and Watson X that big corporations are spending a lot of their IT money on, and that's helping fuel the growth in the software and services businesses, and probably the excitement about the stock as well. The problem, though, is that IBM used to be viewed as this stodgy hardware company, and even though they still have a bit of hardware, mainframes, they don't, have the PC and server business as much anymore. It's now got a valuation that is a lot more expensive. It used to trade at around 15 times earnings. It's now up to 24 earnings estimates. That's ahead of the S&P 500.
Yeah, still pretty light compared to other companies that have exposure to the artificial intelligence industry. I think about IBM. I mean, when did they release Watson? It was early 2000s, right? This was a company that's been talking about artificial intelligence for longer than just about any company out there, but yet has failed to be on the cutting edge. Where are they in terms of that cutting edge today? Where are they seeing success stories in artificial intelligence? And does it have staying power in what's a very fast-moving industry?
Yeah, I mean, I think to IBM's credit, they have had success with Watson, and there is staying power. The problem, though, is that IBM is such a gigantic, diversified business that even the growth that they have in software and services isn't enough to move the needle that much. So, earnings per share are expected to grow about 6% this year, 7% over the next few years. That's not bad, but it may not justify a multiple of 24, because when you look at what Wall Street refers to as a PEG ratio, where you divide the current PE divided by the long-term earnings growth rate, it's trading at about 3.5 times its projected long-term growth rate. To put that in perspective, that's higher than Nvidia and Alphabet, and just in line with Amazon as well. And I don't think any investor in their right mind thinks that IBM is as dynamic a growth stock as those three Magnificent Seven companies.
Likely not. Where do analysts line up on this, right? Is there a lot of optimism among the professional investing community out there?
Yeah, that's interesting as well, because there's a lot of people who joke about how Wall Street is perpetually bullish and buy ratings are all the norm. IBM, it's split. Half of the analysts that follow it have it a buy, the remaining 50% either a hold, or even a couple of people with a sell. That's, I think, telling, because it shows that there's still skepticism and doubt about whether or not IBM deserves this type of multiple. Make no mistake, you're not going to find too many people who think IBM is doing something wrong. It's not as much a concern about IBM's strategy. It's just whether or not investors are paying too much for it, and if there are just too many risks to the downside with regards to execution for a stock that's now priced for perfection.
That's Paul LaMonica joining us today to talk about international business machines, IBM and their AI exposure and their surging stock price holding up the Dow this year. Paul, thanks for joining us. Appreciate it. We'll talk to you next week.
Great. Have a good weekend, guys. Good long weekend.
Yeah. There's the old phrase in the financial industry, right? Nobody gets fired for buying IBM. I think that's a few decades outdated now, but that was like the perpetual story in fund managers and portfolio managers. You don't get fired for buying IBM, and that turned out to be the wrong advice for a few decades now with IBM.
I thought that referred to purchasing services from IBM. Like when you got a bunch of vendors, you don't hire the upstart who pitches you. Oh, sorry.
No, you're good.
Talk over. Okay. I was going to keep talking anyway. Right. So have I been using that the wrong way?
No, maybe you're right. Maybe
there's a variation.
It's more in the tech space.
Yeah, because I think a lot of investment managers got fired for holding too much IBM over the past 25 years. Sadly, another great American institution that we should probably be rooting for.
Yeah, definitely fallen from its heights, but interesting to see it actually executing a little bit.
Now I feel like I have to go back and correct myself with about 500 people with whom I've used that stupid
It's probably equally
expression.
likely that I am the wrong one on this one, Mark.
I don't know.
Buyers seem to be gaining the upper hand in what is a certainly shifting housing market. Everybody seemingly wanting a deal. This is another one of those stories that I have a tough time relating to here in New England, but you are starting to see signs of it across the country that with interest rates where they are, with housing inventories continuing to tick up, and with the weakest April sales month since 2009. That's what we just finished, was the single weakest April for home sales since 2009. Inventory, it seems, is just going to continue to increase. Again, it might not really help here in the New England area because we are so far off of this. I was looking in Connecticut again the other day. Compared to April of 2019, the state of Connecticut only has about 24% of the homes for sale that they did in 2019. But nonetheless, Here we are in May, April of 2025, and there are nearly 1 million homes for sale, active listings across the country. This time last year, we were sitting at 750,000. So the uptick is happening. What happens with prices next, to me, is the big question, because I don't think they can be sustained at 7.1% interest rates. It's all the time we have for the Financial Exchange this week. We'll be back at it next week with more updates on tariffs, taxes, and all the things important to the economy today. Have a great long weekend, everybody. We'll see you Tuesday.